What's up, everybody? How's everyone doing? Can you guys hear me okay? See me okay? I was having some slight technical difficulties there, so sorry for being a minute or so late. Not sure if anyone's getting any feedback from my mic. I feel like I'm hearing some very, very slight static or something, at least in my headphones, but hopefully sound's coming through. Everything sounds good, looks good. But I hope everyone had a wonderful, wonderful weekend. Last week was interesting. That's, I guess, the first way we can kind of kick this off. But I guess we're letting people trickle in here. If you're new, if you are tuning in for the first time, I am Nick. I'm Nick4ATick here at TopstepTV, and I am one of our funded traders, one of our live Topstep top 10 traders. We're still kind of, I guess, figuring out what the show is going to be. But the logic is, if you're here, I'm hopeful that you are kind of looking for a little bit of, help, some guidance, some understanding of, what is going on in these markets. If you're an active day trader, if you're a trader with Topstep, or you're trading your own personal money, whatever it is, this is going to be a place going forward that's going to allow you to at least understand how, here's a trader that is just like me potentially. And here's how someone that's in a similar situation that I am and potentially trading through Topstep, how they set up their week, how they look at the previous week, and how they basically look at kind of attacking things going forward. How do they set up a plan? You don't go in blind. You don't just go in and kind of full port your entire order limit into your first trade of the week on Monday at 8:30 a.m. Central and just hope and pray. The logic is there should be some aspect of a plan or an understanding of, where do I have not necessarily a bias, but at least a perspective on where the market may take us. And last week is not necessarily going to, give us a ton of direction because we were in balance majority of last week across, the indices. We kind of went up, we came back down, and we kind of, finished the week near the highs, which is a little bit interesting. And we'll dive into that as well as, the important, data releases, earnings, news on the docket, and anything else that may move the markets this week. So as I'm kind of going through this here tonight, please feel free to, pepper in questions. We're going to, like I said, do a quick dive in of, what I'm seeing. We're going to watch the open. We're going to, look at the big four, going to be taking a peek at NQ, ES, CL, and GC. You guys know me, I'm not the biggest commodities trader, but we're going to take a look and you're going to get my honest perspective on where we may move, how things may evolve. But much like last week, if you guys recall, we had Jackson Hole, and I was talking last Sunday night about how the market may be just kind of waiting and seeing, kind of hoping and praying for certain levels of cuts or a certain amount of cuts, and it may change throughout the given week, and we may just kind of be sitting on our hands looking for better opportunities, better trade entries as we are waiting for, 9 o'clock Central on Friday morning when Powell was either going to, save the world and the cuts are on the way and everything is fine, soft landing, mission accomplished, or was he going to be a little hawkish and, potentially kind of drum down the inflation defeated talk track and walk back even what some of the Fed members, I believe, were doing in their usual book tour nonsense, Fed jargon, mouth breathing that they kind of do. And just, we're talking about different levels of cuts this week. Were they going to walk any of that back? Was Powell going to say, yeah, everyone needs to kind of take a breath and pause here because I don't think inflation was defeated? If you were paying attention, if you listened to the speech, you didn't get that. That's, I guess, the first perspective that I had. You very much got a similar, I want to say it was maybe last November, maybe it was October of last year when, almost was Powell stepping up there and basically saying inflation defeated, missions accomplished, and all is well and all will be well. So I think we're very much at the tail end of this, up and down. What are they going to do next cycle that we are kind of in? It does seem like Fed funds futures and even him job owning a little bit on Friday was articulating the logic of we're cuts are on the way and we're going to get them. So now the market will be kind of making the decision on the level of cuts and the frequency of cuts going forward. Like, how are we going to get 100 basis points for the rest of this year? Are we going to get 25? And we're going to kind of wait and see. We'll start pricing that in and getting an understanding of how the bond market feels about that. There's a few big things on the docket this week that I think might shape that. And one of them is going to be, I believe core PCE is this week. So the Fed's favorite measure of month over month, year over year inflation is coming up this week. And if you've listened to Powell talk, that's what he looks at. That's what he cares about. So it'll be important. I believe that's going to be on Thursday, but we'll take a deeper look specifically at some of the data releases and the news that's on the docket for this week. But much like waiting for, Jackson Hole to potentially move the markets, this week, I would imagine the market is going to be waiting for NVIDIA. NVIDIA reports Wednesday evening after the bell. And just like we've seen with some of the other Mag 7s, it's a market mover. It definitely can be, a way to get caught with your pants down if you're not paying attention, or if you're actively, potentially in a position Wednesday afternoon into the close. You may get some wild erratic moves as people position with options for the end of the week with whatever the heck NVIDIA is going to report. I'm not going to dive into NVIDIA's earnings. I'm sure we'll have plenty of time to talk about that on TopsetTV this week. But before we kind of get going here and get into, the market open at 5 o'clock, let's take a look at the charts. So if you guys are looking, sorry, choked up there for a second. If you're looking at my screen, we have Topstep X here. And you guys know me from last week. We started kind of doing a very brief overview into the way I market prep with market profile, or with volume profile rather. So if we're looking specifically at last week's distribution, just to kick things off here on ES, what you would see is a very balanced distribution, a very balanced auction. You saw us basically bid. If you remember last Sunday's prep, I had talked about if this potentially gets above 55.85 with a little bit of enthusiasm, we start to make a run toward 5,600. It's not necessarily something I'm looking to fade. And we got that exact move. We saw right after, I would say Globex really opened. You kind of started seeing a very small, bid that we would typically get in the overnight lately. You start to see people kind of just starting to buy. It seems like all is well in the Bank of Japan land. No, crazy overnight fiascos that I'm waking up to in the last 2 weeks. So naturally, with that kind of passive bid that we see with the overnight, we got that continuation into the the Monday morning open, and we basically never came back outside of the pretty violent sell down we had Thursday, as well as kind of the initial reaction post Powell's press conference. Can't speak today. Press conference on Friday, where we got that pretty violent sell down. And I was able to actually catch a pretty nice short on actually both of those moves. It was actually Wednesday, not Thursday, when we sold down, as well as Friday after the Jackson Hole symposium ended. But when you kind of are dissecting the week and you're looking at it from Monday through Friday, you see a pretty balanced distribution, albeit we closed above the point of control in the week and we closed near the highs. So not necessarily saying that we're going to, rotate back down, go back to 5,500 this week, but when you're seeing that type of, I would say, bullishness after Powell and, after the week we had, you are seeing continuation. And we're seeing that continuation from basically where we've been the last couple of weeks, where we've kind of just been going slow up into the right, maybe some news pops that kind of keep us continuing to move higher. So what that tells me is, it's still in very much a buy the dip mode. Even when we kind of look at the last time we were up here, back would have been like the middle of July when we were making the runs at all-time highs, I wanted to get a good perspective on, what was that volume profile structure last time we traded in this area, because it's very telling, or give us an idea roughly on where we may go. If we continue to see some bullishness, obviously the easiest thing to do is just assume we're going to go make a new all-time high. Yes, but the market we know does trade in ranges. So it's important to still have an idea of what those ranges are, because even if we get bullish and we start to push above this 5650 area on ES, it's natural we may find sellers again somewhere around 5680, and then heading up towards, 5,700, 5,710 before, if we continue to build above that, make a new run, go make a new all-time high, and, everyone's favorite, go hit. Oh, we didn't get it. Go hit the air horn, sorry, to signal a new all-time high in the S&P. So one of the things I'd be looking at to kind of kick off this week, and really, if I'm trying to do a prep for ES, or I'm trying to understand, hey, where we may go, the first thing you'd want to understand is I'm not saying to step in front of this if we get above 56.50, 56.65. I believe these are some of the top step levels. Might be weekly kickoff high. I can't remember what the red one is. Last week's high. So if we start to build above last week's high, for example, that would be something where if buyers are present, if we are still continuing to see, bullish flows into Nvidia and some of the other Mag 7, there's no reason to try to short this, because the logic is with Nvidia earnings on deck and things that could happen this week with the news releases, I am not planning on stepping in front of this whatsoever. Outside of, you guys know me, my intraday shorts, trying to spot those exhaustion move higher, and a rotation back into value, which could be, your short here. If in the early part of the week, we do kind of peak above, maybe fail in the 80s, start to fall back into last week's range, just like the plan was last week. If we did that, by all means, look to short this back towards, a run maybe at 5,600, maybe towards Friday's lows. That could be very much an early part of this week, a play that may be successful, something that we could, actively short. If sellers are present, I don't necessarily think they're going to be with Nvidia on deck, and something that easily could send us to all-time highs in the after hours session on Wednesday. Like I said, it's not something I'm really looking to short right out of the gate. It doesn't scream, bearishness. You gotta sell after Powell, and it was bid right back up. As we've said on the show numerous times, you get flashes of a sell the rip regime. We're not necessarily in that. I don't think we are. We may not be until, volatility kind of returns in September and October. So until then, until you see sellers really, be present in this market, your shorts should be, you should be see profit, take profit, and you should be letting your longs run. You really should be, trying to catch that larger move if you do get a long off one of these excess lows that we've seen the last couple sessions. Let's jump over to NQ. Because if you guys, same thing, I know we had talked about this last week. Where are my charts? That's why. I was wondering why my visible range volume profile didn't show up on NQ. It's because I had the tick set too small. So we had talked about last week that, NQ and ES a lot of the time are going to have a similar volume profile pattern. So when you see something like that, it means that you can do what I do a lot of the time, which is use ES levels to guide my NQ trades, just because ES tends to respect them, almost to a T or to a point or two, where NQ, that 1 or 2 points on ES could be 20 to 30 points on NQ. And you could definitely get stopped out if you're not careful with your entry. You're not a little more strategic about when you enter, because you do have so much of those large wiki moves that can happen in NQ, and it can stop you out, and you may not be wrong, and then the move happens and you're all upset because either you've got less gunpowder to still use because you're getting closer to a daily loss limit on the day, or your personal loss limit.
Are open.
And I am hearing in my ear, the markets are open. It is 5 o'clock. Globex has opened and we are on NQ. So let's see if anything kind of happens here. But the logic, what I was trying to articulate there was you have a very similar D-shaped profile on NQ the same way you did in ES. So we were very balanced last week. Despite finishing near the highs on ES, NQ actually closed below the point of control on the week. Slightly a little weaker in theory when you look at the volume profile. But when you're looking at the auction, this is pretty balanced. This does say that, we are still kind of in potentially a decision point. We are under 20,000 on NQ. You've seen sellers with a lot of enthusiasm at 17,900, 17,800 at times. So if you do not see that bullish push above 20,000, and sellers are still present, the same move could be happening because we are in balance from last week. It's still something that you could potentially look for weakness if it does show up to push us back into one of these lower distributions from the previous week, or down towards something like 19,300, 19,200. If we were to get weakness and we were to lose this balance zone up here. I know Friday was a little bit of a whipsaw, but it was a very balanced session. If you look at just the daily volume profile, we pretty much, did a very classic range day, albeit violently given the post Powell press conference. But it was still range bound. We still were very much in what's called in volume profile an inside day. So NQ kind of being bullish out of the gate here, basically up about 20, almost 30 points already. And it looks like, no, that was Friday's volume. I was seeing like 500 lots sitting at 808 or whatever, but that looks like it was part of Friday's. So the logic with NQ, the same thing. We're in a zone right now between, 19,800, 19,900. We're basically in the middle of last week's value. So for me personally, I'm not looking to do a ton until we kind of leave, a section of this area. This 800 level is basically a spot that I have no interest in trading NQ just because it's a coin flip. I would love to trade the breakout of this or short it if we can get a little bit lower or sellers really kind of step on the gas here. When you open inside value from last week, it's kind of a sit on your hands until, a better trade location, as Hogue likes to say, shows up. It's not necessarily something I'm really, eager to jump into, especially on a Sunday night. You guys will see me, on Fast Markets tomorrow morning. We'll see how the overnight kind of played out. We'll see how the London Open does. But for the most part, us opening in value, it's can be a, sitting on your hands kind of day. So if I was looking at this from a pivot perspective on NQ, like where would I be looking for, passive buyers maybe to step back in? Potentially around 700. So albeit 100 points lower than where we are now, but basically back towards the lower part of Friday's range. On ES, if I jump back there, I'd be looking for, 50. If you guys remember in the chat on Friday morning, excuse me. You guys know, I think I caught a good short right after Powell's speech ended, but I was done trading. I really did shut everything down and didn't take another trade. Took one trade. It was good for me. Locked it up. Called it a weekend. Nobody likes to end taking a good green day and turning it into a red day on a Friday, post news and things like that. So naturally, I stuck to my guns and decided not to trade right after I hit that one. But if you were paying attention, if you were following me a little bit in the chat as the day was kind of closing and I was still paying attention to markets, I was talking about an important area at 5631 to potentially look at if we break below that level, if we can get a good, 15-minute candle to close below that, where I'd be looking for a good flush back towards 5600. And we got that shortly after. I think we kind of made a run near kind of the mid of the morning session at least. And once we broke 31, we did violently kind of, thrust a little bit further down. Naturally, we put it in a bottom, but 31 for me, 5630-ish. I think it is roughly, yeah, let's call it 5630 just for good round numbers perspective. If you look at the longer time frame here, it is a high volume node, a point of control, even depending on probably your time frame that you could use, as well as a little bit lower than that is last week's point of control. So when I've talked about volume profile and using things of, where you can not necessarily establish a bias, but an idea on where passive buyers may continue to defend, to step in, where sellers may try to accelerate and push us a little, lower, faster. That's what I kind of describe as a pivot. It's an area where I'd be looking for kind of, buys above, shorts below, in theory, as far as reoffering or rebidding to occur. If we're above that, I'm probably looking to buy the dip. If we're below that and we get a little pop, that may be where I'd be looking for sellers to potentially step in and reoffer. So when I describe pivots during this show or on TopstepTV going forward, I mean, that's how you want to think about, at least how I'm trying to articulate it to you guys, is going to be that type of use case. So I think it's important when you're doing market prep, when you are trying to, figure out a directional perspective on entering or exiting a trade. Your pivots are going to be important when you're doing prep over the weekend, or you're doing prep Monday morning before the market opens. It just gives you the idea of, hey, where's an area that not necessarily I may be interested in entering, but an area that, like I said, a buyer or a seller may be present. So for me this week, looking at ES, looking at last week's profile, you'd probably be looking to, fade reoffers around 5630, and be looking for potential rebid bounces off of that level to long. If we can build above that, if we can hold above that, to get continuation higher. So if we're kind of, like I said, I'm not looking to enter trades in those areas necessarily, just given looking at last week's distribution and that being the point of control. It's just more so going to be an area that I'm looking to use as a pivot where, I am potentially looking at if we can continue to build volume and hold above this area. If it continues to hold above 56.50, yeah, I would say buyers are present and longs are going to be safe. But it's a natural area that you can use to kind of guide when and where and who may show up in those various spots. So just given the volume build there, if we hold above 56.30, I think longs would be pretty safe going into this week, knowing what's on deck, and knowing that we are getting close to all-time highs. I would love to see us hold that level and continue to see, buyers be present and push us to an all-time high this week. Let's talk a little bit about GC, because GC was a good trade last week. And if you briefly followed or were paying attention, some of my market prep last week, we got that weakness after the push to all-time highs that we were kind of talking about as we were trading around 25.40s. I was saying, 25.40, 25.30, you could look for, potentially a rebid there to make another run to an all-time high. And you got that to start the week. And then we failed the all-time high. And now we're kind of back into the middle of last week's range where the same thing is true. If we continue to build above, I would say 25.40, I think that level still has a lot of, has had a ton of volume. A lot of buyers have been present there. And you're continuing to see, enthusiasm above some of these, lower levels, these low volume nodes that you can see here on the right around 52.20, I think was one of the low points I was saying last week to look for a rebid, as well as if you continue to see weakness in GC, we may go back and retest 2,500. And we did. What was that? On Thursday? I think Thursday. Went back, retested around 2,500, 2,506 to be exact. And then we rebid right off of it. So it's definitely looking like buyers are still present here in gold. And, you'd be looking for potentially something to reoffer. If we don't continue to see this bullishness above 25.40, I would expect us to kind of continue to consolidate, maybe balance between 2,500 and 25.30 until the market kind of makes a decision. I think there's definitely probably a path for us to continue, go test 2,600 even, not necessarily saying this week, but gold looks pretty dang bullish if you're looking at this chart and you're seeing us rebid off 2,500, which was kind of that bigger psychological level for a long time. So as you continue to see that and continue to see buyers stepping in and holding us above these, just like we were seeing in the indices, you're seeing like a multi-week profile build. You're seeing higher highs. You're seeing, value areas continuing to shift up on these different time frames. It shows that, buyers are very interested in still transacting at higher prices as the market moves. So the same thing is true here. If we can hold above last week's point of control, if we don't and we lose it, you could be looking for buyers to naturally step in on this low volume node here around 25.20. Or if it continues, I'd be a little hands off as we get probably another chance of knocking on 2,500. We may fall back into, the larger area of value in the, mid to high 24s. So that would be my kind of, knee-jerk reaction and perspective on GC. As you guys know, I'm not the biggest gold trader, but that's pretty telling there when you kind of look at this. And when you look at, someone like me who doesn't necessarily do any sort of market prep on gold, and we kind of articulated it last week during market kickoff of, what could happen, what may happen, at least how I would play it if it was an active instrument that I traded day in and day out. You got a move that definitely was tradable. And you got a nice sell towards the later part of the week as you couldn't hold above that 25.40 level. So the same is true. I don't think a ton has changed because much like the indices, gold was pretty much in a balance of last week. And we will jump to everybody's other favorite, CL. So crude has been a little, I would say, different story. I keep reading things. You keep hearing about geopolitical things that may affect the price of oil and oil futures and all these different things. But we're kind of just in a choppy mess, I would say, for the last few weeks. But it has been very much trendy over a few weeks. So you can definitely get these larger moves that we are continuing to see in CL as we are trying to, I would say, find a direction at this point. It's definitely been very much on a swing time frame. You've been getting probably just walloped of trying to, play geopolitical news or play the inventories that I know D loves on Wednesdays. That really doesn't do anything outside of just make us angry for 5 minutes as the algos kind of just spaz out there. But, CL has been, like I said, a little bit all over the place the last month, last 2 months. Not necessarily the easiest thing to trade unless you've caught one of these, larger moves, but it has been very much, like I said, in different, over different time frames has been trending. It just depends on when you catch it or where that bottom is at times. So in CL, you are seeing us probably bid off, a near term low and potentially looking for a move back higher, maybe towards 77, 78 again. I believe we had a rollover last week, so some of these numbers could be slightly off from what we were talking about last week. I don't remember when the contract changed. It might have been last week. I could be completely making that up, but we are on the V contract. I don't know if I rolled my other charts, but the logic would be, we close it, a high of last week's range as well. So same thing, just taking the instrument aside, just using volume profile like we are kind of starting to articulate of the way I prep when I do trade. It's just something to understand is we're trading above last week's point of control, which is down towards 73.20, which is a larger high volume node on a longer time frame. So we're above that. And we're to the very top of last week's value range. So when you just start thinking about that, just from a rudimentary, elementary level of, how does volume profile work? Why should I care? Well, you're closing at the highs of the previous week's range. So naturally you'd be looking for some aspect of a bullish continuation there potentially. If we can get above 75, you may be seeing that rotation back towards 77. But right now we're trading at 75.28 roughly. Like I said, the very high end of last week's volume profile range. So for me, you'd be looking for, if we continue to see buyers step in and push us back up, you're probably going to see potentially sellers look to reoffer around that 75, 70 level, 76. If you get that and, you can maybe fail there, you fall back into last week's range, it gets a little dicey. And this is where, if you're trading CL, it's just a weird time. You're just not seeing as much, I would say, directional moves. You very much are kind of all over the place, just depending on what's going on in the world. So there's not a great, I would say, setup here outside of if you're going to potentially fall back into last week's range, maybe look to rebid off 73. For me, looking at this, knowing I don't trade CL day in and day out outside of an intraday move here and there, I'd be hands off. It looks like we are still trying to figure out a direction here on where we may go. And with everything going on in the world and with, all the geopolitical tensions in the Middle East and everything else, this is just not something I'm actively looking to jump into and actually trade, which is why I don't love some of these moves. Every time I trade CL, I swear I don't have a green trade. So it's just not my favorite instrument. And this would be a tough read, even just looking at this and, where we've traded, where we may go. It's hard to say. It really very much would depend on, do we rotate back into last week's value and rebid? In which case, yeah, I would say longs would be safe. If you get more continuation here, I might be looking for, potentially a place to fade it. It's just a hard read looking at the volume profile and kind of all the choppiness we've seen in CL the last few sessions. You have up, down, left, right. It's just not necessarily the easiest read for me. So yeah, with that, it seems like it's been a relatively quiet open. Let me jump back to ES. If not, we'll jump into some news. Yeah, pretty quiet open so far. Definitely still at the top end of last week's range. But yeah, let's jump into some. We'll start with earnings. I know we had talked a lot about the only one that probably matters this week being NVIDIA. That's not necessarily the case. You do have a lot of big software names. You had Snowflake last week, who pretty much had a very, I would say, not necessarily a lackluster quarter, but pretty lackluster, guidance, and just, I think they were very much, overvalued at a certain extent. kind of going into that earnings session, that earnings release, excuse me, but nothing too crazy. I really do think all eyes are going to be on probably NVIDIA, obviously, no question there. I'm sure Jensen's going to send us to an all-time high if I just had an initial gut reading. Their year-over-year growth has been somewhat slowing, but then you have someone like Walmart talk about a very good AI story and how it's been, very successful in their initial kind of readings on some of the capabilities of some of this technology and what it can do as far as, just analyzing raw data compared to what they are paying, tens of or hundreds of engineers to analyze at times. You're starting to see some of that potentially come into the market. So that is a good story. If someone like Walmart says that, I think that's pretty telling, as opposed to if, another SaaS name is talking about all the good things they're doing with AI and some of these other, BS buzzwords that they use at times. I take it with a little grain of salt. But when a bigger retailer, arguably one of the largest in the United States, if not the world, is saying they're starting to see, incremental benefits from using some of this AI technology that is, built with some of NVIDIA's chips on the back end, it's something to pay attention to. So as much as NVIDIA's earnings and, their quarter over quarter, year over year growth may be somewhat slowing, they're still growing. So it's not necessarily something I'm looking to continue to step in front of. It just may be that company. However, if you think that's this giant bubble and they're super overvalued, I don't necessarily disagree, but it's hard to shy away from some of the things other CEOs are saying, given the technology. So obviously all eyes will be on the CEO of SPY himself, Jensen, this week. But the others to look forward to are going to be somebody like CrowdStrike, which I think we all remember when half the internet shut down a few weeks back, given an update that was kind of spawned from them. But you also have Salesforce, which I've talked about on TopstepTV before, of just being a good overall heat check on, what are the SaaS names doing? What are companies still spending on some of this, on business applications, on, various technology that it takes to run a business in today's world when AI is kind of taking a front and center approach. The same thing could be, done with someone like Salesforce that does make a lot of very good business applications technology. They do make a lot. They are the back end of a lot of the e-commerce sites out there. If you've never known, they own Commerce Cloud, which used to be an old system called Demandware that built a lot of very large companies e-commerce sites. So a lot of the email technology that you guys get from any retailer, a lot of that flows through Salesforce's Marketing Cloud too. So another very big important name to see, are companies still spending? Are they still actively buying additional seats for things like customer service? The whole CX cloud that's out there for a number of different players in the space. Salesforce is a very good heat check on, are people still investing, reinvesting? Are they really still spending money? Are we seeing that capital expenditure still be put to software? So they are still an important one. Affirm even is another one to pay attention to. If Affirm has a very good earnings this week, that's pretty telling that I think a lot of the already strapped consumer is continuing to maybe be a little strapped. I got a joke sent to me from a trading buddy of mine, but it was, you can now buy now, pay later your Domino's pizza, your Papa John's, which is somewhat horrifying when you really think about it, that you can buy now, pay later your delivery of, some of food, not even groceries, just your Uber Eats order or whatever it may be in time. If that's the world we're living in, that's a bit scary, that if we're that strapped for cash that I have to spread that payment out over 6 or 4. So that's some of the ones I'd be paying attention to. Dell is another one that may be interesting on Thursday's close, as well as Lulu and Ulta. Definitely are a few of the other retailers that, Lulu being a, more higher end athleisure company, just same thing. Do they see positive earnings? Are people still spending on $150 yoga pants? I'm a big Lululemon person, so I can gladly throw them under the bus. But yeah, that's pretty much on the docket. None of these are going to move the market the way NVIDIA does. In fact, CrowdStrike, Salesforce, Affirm, everybody, it's probably going to get overshadowed. It's not necessarily something I'm looking at to actively be taking a trade based on or anything like that. But it just is interesting to kind of look at after the NVIDIA dust settles, when you then look at CrowdStrike, when you then look at Salesforce, when you look at Affirm, what does that kind of tell you under the hood? Just given that if NVIDIA is positive or negative, it's going to move the market regardless of what the others report, whether they are good or bad. You just may see that completely be overshadowed. So I'd be looking to dissect those, Wednesday evening and listen to some of their earnings calls as well, as far as, what Salesforce and CrowdStrike have to say. But there's a good amount this week that are important to watch. Like I said, there's only one that's probably going to move the market, and we all know that one, and we're going to talk about him all week leading into Wednesday. Definitely is going to be a fun week, just given that that's on deck, and we know how much NVIDIA moves the market intraday as it is. So when you compile that with options positioning for not only the SPOOs and in the triple Qs, but just the single stocks and how much NVIDIA intraday moves the NASDAQ at times, it's foolish to not pay attention and know that that's on deck. As far as earnings and data, or not earnings, as far as data and other releases this week, there's a lot on the docket. There definitely is a good amount of things that may move the market this week. We have a 6-month bill auction tomorrow, right at the Euro close. So that'll be something that definitely can move the market. You've got Dallas Fed manufacturing tomorrow morning, right at the market open. You've got durable goods. So there's definitely things even to kick off this week that can definitely give us a little whipsaw and some tradable action just to kick things off. But the important one, the most important one outside of the 2-year, I would say on Tuesday is going to be, when is PCE? Is it Thursday? Yeah. I believe it's actually Thursday and Friday. Yeah. So we have jobless claims, and you have PCE at 7:30 on Thursday, as well as the month-over-month, year-over-year PCE on Friday. So if you guys recall any of the many Powell FOMC speeches, he's talked about what he really looks at, not necessarily CPI, but he looks at the core PCE numbers. So that is going to be something to watch, not necessarily to be truly market moving, but to see how the Fed's funds futures, that's always fun to say, Fed fund futures may shift this week, given some of these data releases, knowing that Powell all but said, I'm going to cut in September. The question now, like I said earlier in Market Kickoff, was going to be by how much and how frequently going forward. So some of these PCE numbers may be a little bit telling in giving us an idea on, where that forecast may go. You're going to still see very much a soft landing scenario, probably to start this week, because I believe on Friday's close after the Jackson Hole ended, I still think Fed funds futures were trying to price in at least the majority of the percentage was still pricing in almost 100 basis point cut left this year, which is kind of crazy when you think about where we were a couple months ago, when even the Fed was even saying, I don't see cuts in 2024. So if they cut too much too fast, I'm assuming the market may not react well to that, but who knows? The logic is we're going to kind of wait and see and, react to these things in real time and try to find a good trade here and there. That's all we're trying to do. We're not trying to predict what the Fed's going to do. We don't really care at the end of the day as traders what the Fed does. We just care about what the reaction is after they do said thing, or how the market reacts to when they do said thing. That's really all we're trying to do. And we're not trying to take 400 points out of the NASDAQ based on that move. We're trying to, get our crumbs, run away, and wait for the next trade. If you are trying to catch these very large swing moves with futures, you're going to get hurt day in and day out. It's too difficult. And, like I said, guys, we are day traders, and the goal here is to preserve capital, is to make some passive income, make some money, and move on to the next trade. Whether it's a good trade or bad trade, if we move forward after some of these releases, if you like to trade them, all the power to you. Not necessarily something I always look to do. In fact, I can't remember the last time I actively traded a news release. I will trade the aftermath or the aftershock of some of it to a T, but that's pretty much what is on the docket. Obviously you have PMI, you have Michigan consumer sentiment on Friday, which is going to also add a very lovely algo seizure to our DOMs just about every 2 weeks when that comes out. I laugh at how violent still Michigan consumer sentiment is. I don't know why it moves the market the way it does sometimes. It just spazzes to such an extent and stops you out. And you always forget sometimes that it comes in, after the market's open. So always be paying attention. If you guys are interested or curious, or you've never bookmarked the news, these news dockets or these news calendars, Financial Juice is great. I also like Trading Economics because their calendar is like this and looks super clean and is easy to read, and you can filter based on your country. If you trade the London Open and you're more curious about some of the EU data releases and news things that can move the other markets, you can obviously filter towards whatever the time frame, the time of day, or the markets you're trading. I just have things filtered to the US and Canada, just given most of these news events happen during RTH, which is what we care about here. So on that front, that's pretty much, I would say, the major ones. I think there's probably something else I am forgetting there. I know I said jobless claims. We have unemployment this week. I don't think so. Okay. Yeah. So that's the gist of it. But like I said, the other ones, the important bond auctions, the 6 month, the 2 year, I don't think there's a 5 year. Yeah, we will get the 30-year mortgage rate this week too, which may be interesting, just as we've kind of now all but said we are cutting rates. I'd be curious to see, what the 30-year mortgage in the US looks like. Just knowing that going into cutting cycles, just where they may be pricing this week as we make it that last. Housing just is at a weird spot when I don't know who's necessarily going to, and you can refi, obviously, as long as the price of your home continues to potentially go up. But the logic is, if you're buying a house right now on a 30-year mortgage, and the Fed's about to cut, and the price of your house doesn't necessarily go up, refinancing gets a little difficult. So it'd be interesting to see where these are kind of pricing going into this potential Fed cutting cycle here in the near term. So that's something probably not this week, but as we get closer and as cuts are starting to be made, that I'm going to be paying a little more attention to as well. All right. And everyone's favorite new model that I'm glad I can start including into this, as well as other times I am on TopsetTV, because you guys know me, I like to use the SPX options levels to guide a lot of my trades or my entries or my exits, because these things, as much as people want to believe it or don't, these things are what's moving the market every day. I don't really care what anyone else says. That is my belief, and I will die on that hill. There's no question. And I think I've proved it at times with a few of my trades. In fact, even the short I took on Wednesday, that I caught the very top of the intraday high, and wrote it down to a good amount of the day's range in an ES short. And I was basing that purely on options activity for the day. So what you're looking at right here, if you have never tuned in to me or you've never seen me, scream in the chat as much as I can about some of these SPX levels, this is our TraderAid model. So TraderAid was started by a mentor of mine, but these are his options levels. The logic is, this is, or what you're seeing right now is not the 0 DTEs, because we can't see them because the market's not open. This is Friday's close. This is how the no expiry, so this could be anything that's on the chain currently, looks. So anything in the SPX options chain is currently looking like this. We are seeing a lot of positive gamma exposure. So this is not the volume. This is not necessarily, what's been transacted or where we may go or where people are betting on where we can go. This is telling you more so when you're looking at larger institutional players, just where, not necessarily how they are positioned, but where the gamma exposure lies. And if you're curious about gamma exposure, there's a ton of resources out there on what it actually means and what it actually is articulating, the phenomenon behind it, basically. But we can use gamma exposure to kind of guide. Sorry, I had a dog crying and I was wondering what was going on. You can use gamma exposure just to kind of guide various levels. And the good news is, since we trade the S&P, or you're using the S&P in theory to, either whether you're an ES trader or you're someone like me that uses ES to kind of guide your entries on the NQ. The same can be true if you're utilizing that information via the options chain. So I use SPX gamma levels to kind of guide that decision making. And what you're seeing on a longer time frame, as I said, no expiry necessarily taken into account here with this gamma exposure, but it's telling us that much like last week, you're continuing to see positive gamma exposure and interest in theory in higher prices of these options. So all the way up to the 5,800 strike. I had to make sure I was saying that correctly. You are seeing, bullishness all the way up to new all-time highs and then some. So as we continue to say, hey, where we may go this week with NVIDIA on deck and everything, I mean, it's hard to look at this and really have a bearish bias. It really is, guys. And I'm the first person to not necessarily fade a rally, but I'm the first person to short an exhaustion at Topstep. There's no question. If you've watched me trade, you guys know I love to do that, and I'm pretty good at doing it. Doesn't mean that's the right play at times, and doesn't mean I don't get punched in the face when I try it at times because of data like this. I'm shorting some of these knowing that some of these intraday option walls on the zero zero DTE perspective may fail because of how bullish some of these, higher levels are. When you are seeing the largest gamma strike right now, all the way towards 5750, that's above a new all-time high. So that's pretty telling. It's always interesting to see this on a longer time frame, but then you do need to understand that, yes, this is great, but some of these people or some of these market makers could be hedging or utilizing these positions with a time horizon of, 2028. Like we don't exactly know how much this encompasses as far as the time frame goes, but it's still important to see as we continue to see bullishness, as we continue to see volume build potentially above 5,700 on ES. The spread is probably 15 points, maybe getting shorter or smaller, But knowing if we continue to build volume above 5,700 on ES and you're seeing options interests 5,800, it's hard to look at that and not be in a buy the dip mentality going forward until something changes. And until sellers are present, it's very hard to short this market. And if you are shorting this market, you need to do it strategically. You need to know where your exit is, and your exit needs to not be a new low of the day. If I'm being honest, it's just so hard to hold them because even as violent as we got to flush down towards SPX 5600 on Friday, like after Powell, and I think I was calling that out, as if we broke 5630, we were probably going to do that. Well, the buyers showed up in a big way and pushed us all the way back to the top of Friday's range. So you're seeing dip buyers be present, and it's hard to want to fight those flows. It really, really is. It's just something you like I said, if you're going to short it, you need to know where your exit is. You really do. You need to see profit, take profit with any short position right now in this market. Doesn't mean you can't make a ton of money with it. I made 5,200 on Friday, shorting whatever it was, shorting 900 in NQ and riding it down to almost 800. So the shorts can be had in this market. There's definitely in this higher VIX regime that we are now in. There's definitely ways to play both sides, but you need to be careful on, in my opinion, anything out of the short side, because there's no one ready to bail you out of a short. There's plenty of longs ready to bail you out of a poor entry if you went long a little early, albeit if you're trying to catch falling knives on like a day like Friday, you're going to get hurt. So, but if you're patient and you kind of wait for institutional buyers to be present and show up and try to, form a bottom like they did Friday midday, you could have rode that. I think Dakota caught a very nice long with that same logic in the low sevens and rode it up to almost 8. So you're much safer kind of doing that than you are trying to short any sort of high. So knowing that, I do think it's also important to still understand on a not necessarily a shorter time frame, but what you are looking at. This is the net gamma exposure at the top. When you're looking at kind of the total, not the total, sorry. So the spot gamma exposure as well. The gross gamma exposure. God, there's too many terms. You do see that, a trip back to 5,600 is very, very possible on SPX. If we do get some weakness, you do see a good amount of, negative gamma exposure down there. So same thing. We may continue to kind of ping pong some of these larger psychological levels, 5,700, 5,600, until the market makes a decision. And if you recall, as we were kind of going through the light ES prep in the beginning, it's going to be, we're still in balance, I guess is what I'm saying. So us making, a traverse of last week's value back towards the lows makes perfect sense. But I always like to show the gamma exposure to you guys as well, just because it gives you a good look on, where we may go as far as options activity. But still, the important thing to do is when I'm on Fast Markets tomorrow is to take another look at this and really see it with the 0 DTEs as well, because that'll at least give us a guiding light as far as where we may go to start the week. And I just realized my light wasn't on that whole time. Hopefully that's a little better. I don't know if I've been dark this whole time, but that should make things a little brighter. But let's take a quick peek back at the charts. If you have questions still too, guys, about anything I've covered thus far, feel free to pepper them in. I have not been checking the chat. I've just been rambling here for the last hour. So I apologize if there have been a ton of questions, but please continue to throw them in. It looks like we did sell off a touch. Let's jump back to a 5 minute here so we can actually see. Not really in ES. NQ is probably a little more violent, but we did go towards the top of Friday's close and kind of fail there and are now falling into kind of the middle of last week's, or sorry, the top end of last week's range. Let's see how it looks on NQ. Yeah, NQ definitely a little more violent there. What did we open in the 80s? I guess we were at like 800, I believe, weren't we? Yeah, so same thing happened in NQ. We kind of came up right into, kind of the low 8s and then failed. So the same thing as I was talking about, my prep for the week. If we jump back to, we talked about this in ES more, but at ES being more at the top of last week's range, NQ was in the middle, and we didn't make it even to the point of control. So back towards 850 on NQ before we failed. So the same thing is going to be true if we can't get back above, 19,900 on the NASDAQ, make a run to 20,000. It's very possible that we may go traverse, most of Friday's range back towards the lows of last week, even back towards, 19,500, 19,600. So I think us having such a balanced week last week and us continuing to kind of open in the middle of that range in the NASDAQ. I know ES was a little bit towards the highs, but it shows us that, the market's still at a decision point, and, until we make it, the middle of this value is not necessarily something I'm really looking to enter trades. You're probably better off, waiting for the edges of this, the low volume nodes back towards, like I said, 19,650, 680s, and maybe even fading like we did on Friday, fading those mid to low 900s. It's definitely an area where, just like I said on Friday after Powell, sellers were present. So it's just something to keep in the back of your mind. If you don't see that enthusiastic push above 20,000, I know that's a kind of a big psychological level, it seems like right now, you're maybe better off kind of taking the range play into account and looking to fade us back towards, a higher area of value, towards the previous week's point of control, whatever it may be. We're just very much range bound for the time being. And if you guys know me, or if you've watched the show, or some of us on there, entering inside value or entering in the middle of the range, it's a coin flip at times which direction it goes. So there's going to be plenty of opportunities this week as the market is continuing to kind of make a decision. But that's kind of my perspective and my plan. Like I said, middle of value, very balanced week, previous week. We are still trending higher on a multi-week time frame, on a month time frame. Do we go make the run to all-time highs? That's probably what I'm looking for this week. We've just seen this song and dance so many times before, and if the market's going to be waiting for NVIDIA to save us. We're most likely going to slow grind like we've been doing the last few weeks, just albeit a little bit higher here and there. But it's hard to look at, like I said, the charts, the volume profile, the gamma exposure, and be too bearish. It really is. So I will pause there. I'm going to get to some questions here. If you guys have them in the chat, feel free to kind of throw them in and we will get them answered. But to recap here, as far as my prep, like I said, I'd be looking at 55.30, 55.40 on ES to kind of potentially hold, potentially use as a pivot. On NQ, same thing, maybe 800, maybe 900 at the point of control, albeit a little bit above the point of control. It would be an area that I'd be, potentially looking for longs to continue to build, to go make a run at 20,000, and below that, potentially go back towards 19,006. Same thing on ES. So coming towards my pivot here around 56.40, do buyers show back up and kind of hold us above that high volume edge from last week, as well as the longer time frame here. I think I said 56.30 actually was my pivot, not 56.40. So take that with a grain of salt. But yeah, guys, that's the plan. That's kind of how I'm looking at this. Opening in value, not a lot to do yet. Usually would wait or take the range play, but that's the gist. I'll get some questions here. Where do you get these earnings releases? So you can use Earnings Whisper. Would be kind of the easiest one, honestly, even with your Sunday prep. If you just Google Earnings Whisper this week, that's literally what I do. And I just grab their screenshot that they put out on Twitter and then just, have it in the back of your mind, or look at the important ones, or tune in to Market Kickoff with me, because I'm going to go over the important ones. I know we're kind of into the tail end of earnings season here. So that section of this show will take a back seat most likely, just because no one's reporting. We'll hit the lull in earnings season for probably 6 weeks until the banks are kind of back in rotation again. And then we get to start the Will Tim Apple Save the World Again fun that I like to I like to bring to the show and to my trading as well. So but yeah, you can check out Earnings Whisper is probably the easiest one. That is their, oops, wrong one. This is theirs. But yeah, they put it out for free. You can subscribe or follow them on Twitter too. It's just a very easy way to kind of compile the week. I just like their format. It gives you the company logos. It gives you, who's reporting. And it usually puts the important ones near the top. So it makes it pretty idiot proof for someone like me, who's just trying to understand what big names are going to be, shouting AI 14 times on their earnings call to try to pump the stock. Hey, Nick, do you use a 100 tick chart or 500 tick chart? I don't. I know Mr. DBA, Mr. Slow Markets himself is a big fan of the 100 tick chart. I never got into tick charts. I very much have always used, multi-minute timeframes as far as my executions. In fact, I use a 1 minute on my NQ and a 2 minute on my ES to execute. That does not mean that I actually use that to guide my decision making. I know you guys only see my execution chart, but if you've ever noticed it, most of the time there's a 4 hour next to it. So at least it keeps me from, just purely gambling on a short time frame. But if you were to see my full, setup here, I have my hour, my 30 minute, my 5 minute, and several others that I kind of use to actively guide me executing on a 1 minute. I wouldn't say I use a 1 minute to make my decisions. But it's just how I like to view the market like when you're in a trade or when you're scalping NQ the way I do, I like to do it on a 1 minute time frame as far as my entries and my exits. I like to kind of watch the DOM, see how things are moving, see how the candles are closing. I know that's kind of crazy to think of it as a 1 minute. It's not necessarily using the 1 minute. It's more so how several 1 minute candles can kind of build. And if you've ever seen some of my charts before, I use delta candles. So they actually paint colors based on delta too. So that's why I use such a short time frame. Some people actually, base it on volume as well. I know a lot of traders that use a 750 volume to trade NQ or execute on NQ. So there's 100 ways to do it. I've just never been never actively used a tick chart to view my execution, but it works for one of our best traders at Topstep. So there's definitely something to it. It's really just kind of to each their own. Do you use Edgeful? I don't personally. For me, I just never had the opportunity to play around with it. I know a lot of the people around TopsetTV have used it. I know there's a ton of good information there. So if it works for you and it's a good way to kind of guide your decision making as far as gaps being filled and different ways to enter and exit, I know there's a ton of good market generated information that the Edgeful team provides. I just personally have just not had the time to play around and really use the platform yet, but I still am meaning to. It's still on my long to-do list of various knowledge share that I'm trying to still gather in this space. But yeah, it's a great tool from what I've seen, and there's a lot of awesome information. I know that Anne-Marie shares, I know Dee shares, I think Hoga shared a good amount too. So by all means, check them out. I know it's a really awesome tool. I wish I had more time on my day. You guys know me. I'm looking at charts, I'm looking at options, I'm on the show too. So I don't always have time to, base and educate and relearn some new data points. But when it's shared for me, you bet I am paying attention to it, because there's a ton of good insight that has been shared through Edgeful and through some of the other, data providers and things that we do share on the show. So pay attention. There are golden nuggets that are constantly dropped on things like, gap fill stats. I know that Edgeful has, I think Austin Silver was talking about once, and I was very intrigued by some of those. So definitely check them out if you're interested. Gamma profile, where do you find it? So there's a ton of tools out there. I have used a bunch of them. For me, some of them became almost like analysis paralysis, where it's just they're giving you a ton of information and it isn't necessarily always good. Not necessarily that it's bad information, it's just becomes noise at times. So I just have gotten more comfortable using almost like an all-encompassing histogram, like what I was showing you, or when I was using, like I said, my mentor's models with his gamma profiles here. You can check it out too. His site's called TraderAid. There's a ton of other resources there too, but the logic is there's spot gamma, there's GEXPOT, there's a million out there in the space. It really comes down to what information are you actually trying to read beyond just gamma exposure, because a lot of that is what this is, and then another kind of layer thrown onto it, but it still means relatively the same thing. It also depends on your time frame. I use these with a slight delay because it just gives, like I said, when you're talking about information paralysis, if you're getting the real-time data, a lot of it sometimes can be noise as market makers are repositioning, are adjusting position, are rolling contracts, whatever it may be. So sometimes you can get not necessarily false signals, but if you don't understand the data you're reading in real time, it can just become noise, or it can give you a false signal or a false perspective on what the market's actually doing. So for me, I have just gotten, maybe you would say I've gotten old in this, and it's too much information for me to make an accurate decision at times. So I've just based it on literally the caveman mindset of where's just the big ball of liquidity, and knowing what we know when you use things like Bookmap or when you see large orders on the DOM, that markets tend to gravitate towards those large buckets of liquidity. That's just how I look at this now. When you look at some of the other providers out there, they have a ton of good information. It just depends on what are you trying to do with that information. So like I said, there's GEXPOT, there's Spot Gamma, there's a million others out there in the space, but they provide you sometimes with a lot more information than even what you need to enter an ES trade. So check out a bunch of different, providers out there, but there's a ton of ways to read gamma exposure. And even, I'm not kidding, this is what I did when I first got exposed to these concepts. Put it into ChatGPT and ask them to explain gamma exposure to you as if you were a golden retriever. If you think I'm crazy, I'm not. That does work. It is a very elementary way of understanding some of these very complex concepts in options trading. Options trading is not easy. That's why I don't trade options very often. Sometimes I express swing trades with options as my time frame, or sorry, I express swing trades and options, knowing it's a longer time frame and I can allow things to kind of play out, and I'm not, wicked out by the way NQ moves sometimes to express my opinion in the triple Qs, things like that. But I'm not an active options trader. I just do it every once in a while because it makes sense to express a trade that way as opposed to a futures contract. So tons of ways to read gamma exposure, but the logic is some of them are, it can be a complicated concept as far as like what's actually going on. So I try to just remove that noise and focus on the logic of where is the big liquidity, and then knowing the concept of markets tend to magnet towards large pools of liquidity. That is honestly, as a futures trader, day to day, being able to hold positions overnight. That's all you should use gamma exposure for, is just large pools of liquidity. Where are the big players? What are they trying to do? Are they trying to guide price towards 56.50 SPX? If they are, maybe I should try to get on the side that is making the play towards a run towards that strike. So that's kind of how I use it. Do you ever use squeezemetrics.com? I don't know what Squeeze Metrics is. So if anyone in the chat uses it, if you want to chime in and explain what that concept is, I've never used them. Definitely will check them out after this, but no, I've never actively used that. I trade SPX, 0 DTE. How does this gamma thing help me? If you trade SPX and you trade 0 DTEs and you are not actively looking at the gamma exposure chart on an intraday from a 0 DTE perspective, you're doing yourself a disservice. So if you're an options trader and you do trade 0 DTEs, if you gamble in that casino, it's definitely a concept I'd be looking to tell you that you should get more exposure into, and you should get a level of learning behind, because you're playing against the big boys, and that's a world you should have an understanding of how things move and how market makers are positioned with 0 DTEs to hedge and things like that. Definitely is something, like I said, I think I gave a few resources of where you can start to learn and understand. So definitely check some of those out if you want to understand, or if you are a 0 DTE casino trader and you are dabbling in the casino with the Goldman interns as we get towards MOC, definitely, all the power to you, but, use everything in your arsenal to compete with them. And that would be guiding yourself with education. And that's the type of thing you can do by learning some of these concepts like gamma exposure. What are delta candles? So delta candles are just a way of viewing, the positive or negative, how many buyers or sellers are present in in the time frame of your candles. So in my motive wave charts that I've used or you've seen on TopstepTV in the past, it basically just repaints based on a positive or negative delta. So if you've been tuning in TopstepTV and you've heard me or Hogue talk about, the delta by price at times. So you can see where, positive or negative delta is, where there are more sellers, but buyers, but price isn't necessarily moving. That's when you start to see positive delta start to build. Positive delta start to build. That's where you see negative delta start to build. And it can give you a sense of iceberg orders and things. But how I use them on my execution chart, it just comes down to a way for me to see if the volume, let's say you have candles set to 1,000 volumes. So basically he's looking for, like it sounds, 1,000, 1,000 transactions on the auction occurring in whatever that time frame that candle is. And it's just, for me, delta candles are just painting that candle a specific color based on was the delta in that candle positive or negative. So it's a concept that certain charting platforms have. I use it in my motive wave charts. Hopefully we get delta on TopsetpX here in the near term so that we can start utilizing some of those concepts. Like I'm going to be so happy when delta by price shows up in TopsetpX and just makes my life easy. But that's how I've used it in motive wave in the past, is going to be, repainting the color of my candles rather than it being, a red candle or blue candle. It's even if price is moving up, but the delta is negative, I would see still, up and to the right of red candles, which tells me, there's more sellers than buyers, but price is moving up. So there's something behind that, if that makes sense. If you've listened to me talk about delta by price, it's the similar concept. You're seeing negative delta in those candles, but price is moving in a positive direction. So shows you that sellers are getting their butt kicked. And we are coming towards the top of the hour here. I don't know if there's any other questions from anybody in the chat. If not, we can pause here. But one of the things I did want to talk about was a big release we kind of teased on Friday. If you were paying attention, if you were watching TopstepTV, there is a new feature being released, or I think it has been released. I don't know if, I think Danielle's in the chat. I believe it went live as we were on the air. The removal of the daily loss limit. You can now set your own daily loss limit inside of TopstepX. So you are no longer handcuffed, if you will. If you are someone that, wants to risk the account, or you want to set a smaller daily loss limit, your personal loss limit, whatever it may be, it is now active. We can actually do this here. Let's do it. Message from Coach T. Is he going to shame me if I set a personal daily loss limit to full port? Setting your personal daily loss limit on TopstepX is essential for managing risk and protecting your trading account. The daily loss limits help ensure that your trading activity aligns with your long-term goals, allowing you to take a step back, reassess, and return with a focused mindset. So TopstepX is giving you the ability to remove your daily loss limit. I don't believe it's going to be set by default. I believe you have to do this yourself. If you're trading a 150K account and you want to go full port and set it to 4,500 on day one in your XFA, I believe you now have the freedom to do that. I would not recommend anyone do that. I'm sure some of you are going to do this. I actually do love this message by Coach T. In fact, just because we've all been there, you've been on the wrong side of a trend, or the wrong side of a trend day. And you getting in a 150K account, that extra 1,500 in drawdown, I'm sure you would have still lost it anyway if you're fading a move. So this is a really awesome feature. It just allows you guys to kind of set your own risk and, operate the way you would if you were trading a personal account. There's no hand holding, there's no babysitting there. So use caution is what I would say. Don't go full Leroy Jenkins and just trying to, kick down the door and go full port and, use that entire 4,500 in drawdown in one trade. If you're doing that, I think you're not going to last long in this game. So, all the power to you. I wish you the best, but that's not what I would recommend doing. Definitely I do love the hard stops sometimes personally in my live account. Just because, I know for a fact that I've been caught on the wrong side of a trend, and I think a day like Thursday, I hit a daily loss limit. I was trying to catch the knife on the sell down that I think we had in the morning, and buyers did show up, but albeit 15 minutes later. And if I had still been trying to fade it, I probably would have taken more than a $3,000 loss in my live account. So I'm thankful for it, but it's definitely something that you guys now can do to adjust your personal daily loss limit. And if you want that loss limit to be your maximum loss limit in the account, like I said, all the power to you. I would not recommend going full Leroy and doing this yourself, but teach your own. You are the first risk manager of your own account. You can't rely on the system and Mick and everyone else to kind of pull the reins in a personal account. So we're giving you that control. We're giving you that freedom. If that's what you want to do, like I said, all the power to you, but you can do this yourself. So we're going to continue to manage your risk. So that's the other thing too. You can also set a personal profit target too, that will lock you out. But this is cool, guys. This is really like you were trading your own personal account. It's as you build up your balance, if you want to get a little looser with it and not be handcuffed by that $3,000 limit or that $1,000 limit, if you trade the 50Ks, you get control. So if you got a pretty good balance in your 50K and you started to kind of really feel confident and you started to build and you were like, you know what, I want to move it to 2K, to 3K, like I would if I was trading a 1,550K account. You now have that freedom and flexibility. So that's where I would recommend, hey, maybe you do open up the reins a little bit, is if you've built a very comfortable balance and you're feeling very confident in your trades and you've made, a good cushion in that account, then by all means, yeah, you shouldn't be handcuffed to do $1,000. If your winning days are well above that and you're managing your account very well and you've been trading in it for a number of days, but if you are day one in an XFA in a 150K account and you lose, I'm sure there are people that have either already done this since Globex opened, since we had a nice little flush that may have full ported and are already staring down a drawdown towards $4,500. That's sad, guys, that we just released the feature too. But I think there's a place for this. If you have, like I said, you've built a number of winning days and you're starting to build that balance and you want to open things up a little bit, trade a little more size, by all means, that's where I would take advantage of this new feature and really treat it like you would your personal account, where you need to be in charge of how much you're losing in a trade or in a specific session, because there's not going to be hand-holding if you don't want it to be anymore. Lose my voice here. I will pause there. I'm fired up. This is actually pretty cool. And the best sparkling water, Topo Chico with a twist of lime. My favorite. All right. So I don't remember which account we're on, but if you wanted to, like I said, full port, you now have the freedom and flexibility to do that. So what a cool feature. And I know there's going to continue to be new things being added to Topstep X. I know last week or 2 weeks ago, was it hotkeys? It was 2 weeks ago. Yeah. I'm still going to get those set up here. I still have my Stream Deck that I have not touched yet. I still need to get hotkeys set up so that I can actively try to be adding to winners, and scaling out of positions is one of my goals that I've been trying to do. So I'm glad that I now can do that inside of Topstep X, because for me, I'm still working on some combines that I'm trying to get pushed to XFAs in Topstep X. And I would love to continue to play around with my hotkeys and get comfortable with them using combines and not trading my live account. So I'm going to do that this week. That is my goal, is to get those set up so that I can start playing around and getting comfortable executing on a Stream Deck, which I've never done. I know Rips is the king of doing that, as well as a few other people that use hotkeys, but it's a goal of mine to get that done this week and actively start trading my combine accounts and my sim accounts while I work out the kinks, because nobody wants to accidentally hit the full port button and go 15 lots long at the wrong time. So with that, with the release of your own personal loss limit and being able to manage your own loss limit, I'll pause again for any other questions. If not, I will say goodnight and, wish you guys a good last Sunday evening with no football. Then we had a week 0 here in college. Next week, everything kicks off. So I will be glued to a TV going forward, but I will be here to kick off the markets with you guys every week and do some prep. And, as we head into football season, hopefully we get some fun and some fireworks and some good things to keep us occupied here on Sunday nights, at least for our American football fans here. I know we have traders all over the world. So if you're not an NFL fan, I know they're still trying to grow in London and Germany with more games this year. So tune in. But if not, guys, thank you guys for tuning in. Thank you guys for, hanging out with me. If there's more you guys want to see, please continue to share, give us feedback on, other things you want me to talk about, other things you guys want me to dive into, and really give you exposure into my world, how I prep, how I do things. But if not, like I said, thank you guys. I hope everyone had a good time. I hope everyone learned something. I hope everyone is prepared for this week. I hope everyone is not full porting their brand new combines or their brand new XFAs tomorrow morning at market open. If I hear that we are seeing a lot of $4,500 daily loss limits tomorrow, I'm going to be very sad. Please manage your guys, be your own risk manager is job one. And if you're going to be in this game long-term. So thank you guys. Have a good night. I will see you bright and early on Fast Markets with Coach DBA. If you're going to stick around, I know he will be live here in about 90 minutes to actually give you guys some trades and hopefully give you some fireworks here in the overnight session. Tune into him, tune into Market Stalking with Dee as well. I know she's going to be on shortly for the London Open here, so I will be asleep, but I hope you guys can tune in if you are a night owl or still awake or starting your morning here in a couple hours with her in the London Open. So good night, guys. Good luck. Trade safe, and I will see you bright and early. Cheers.